Detail first, right?
Yep. Okay, so we're live.
I thought I was a very bad student in JC
when I was doing economics, and then I think my teacher also told me, oh, you're terrible. So hi everybody, I'm Darren. I'm 33 years old this year. I was a regular. Yeah, not a medium. No, I was a regular, SAF regular. And then I left the service in May. Growing up, I never really had an affinity with investing. I always avoided it, maybe because I thought I was a very bad student in JC when I was doing economics. And then I think my teacher also told me, oh, you're terrible. So maybe from that I convinced myself, like, hey, you'll never become a businessman, you will never understand business or stock markets, etc., etc. So all my investments before this, right, were either fixed deposits with banks or ILPs with other insurance companies lah. Then also every now and then you have the remisers who give you stock tips, and then from there that's how I started investing. We were all the same. Every time when you click buy on a certain stock, the next thing you know, the price goes down, and then you're like, yeah, why did I buy now? Because of that, and because of the idea of being able to generate passive income, and me wanting to have that conviction in the stocks I buy, so after I found about VIA, I decided to come and join VIA's course. Yeah. So I think the most valuable lesson I've learned from VIA so far would be how to properly evaluate a company, and to also make sure that these are companies within your circle of competence. I would say that because previously when you get stock tips from remisers, they're basically from stocks that are, I mean, it can be any single stock within the SGX or wherever. So the thing is, it might be something that you don't understand. It might be something that you have never heard of until he mentioned it, and just because he mentioned it, you just buy it. You didn't do your homework to evaluate how the company is, what are they doing, do you even know what the company does? So I think this is the most important takeaway for me. What Cayden has mentioned before about you must be able to buy stocks and still be able to go to sleep at night peacefully, I think that one really resonated with me, because there are so many people out there right now giving tips on what to buy, what not to buy. But the thing is, once you put your hard-earned money there, can you actually really comfortably go to sleep at night? That is another thing to consider. Yeah. Investing didn't really change my mindset in that sense, but knowing how to invest better, for some reason, give me more confidence to, okay, I will set aside some more money to be it a stock or am I selling options or whatsoever. It gave me more confidence in doing that. Before that, I didn't have that conviction to say, okay, I'm putting aside this much to do this and that. Yeah. My goal would be to generate enough passive income, and then of course I want to achieve financial freedom. I think everybody wants to do that. What happened was I graduated from VIA batch 58, which was a few months back only, and then I immediately started selling options like what Cayden taught. And now it's about 3-4% or so since I started, since May or June. And hopefully one day, I would be able to generate enough passive income to far supersedes what I'm earning on a monthly basis. And from there, I have the time to do whatever I want to do and whatever I enjoy doing in life. Yeah. If you want to start investing, the first thing would be to not be scared away by the words or numbers that you don't understand, because that was what happened to me last time. It will always look intimidating, but just don't doubt yourself. Start small and then just keep going at it. A phrase which was told to me last time when I was still in the service was TTT, things take time. So everything takes time, So you might not be able to get it straight away, but don't worry, just keep trying to refresh on what certain terms mean, what to look out for maybe in a company. Maybe if you look at the annual report, you're confused, never mind. Look at it today, you're confused, okay, put it aside. Come back again tomorrow, just look at it again. It will come to you eventually, don't be afraid of that. So even in terms of the ROI, because at the start it's always very small, But things take time. Don't be demoralized and just keep going at it. I think Cayden is also someone who emphasizes a lot about time. This is something which I think really holds true. You either have to have that time horizon, and then you have to be able to tell yourself to be patient and watch it grow.
Hi, this is Cayden from VIA Value Investing Academy. Now, thanks for joining another evening of our YouTube Live. And of course, thanks for watching the video that you have just seen. By the way, this very young gentleman, his name is called Darren, correct? His name is called Darren, right? Yeah, he was an ex-SAF regular, he signed on, become regular. And then, of course, he already shared that investing is really, really important. Yeah, which is why he shared his story. Yeah. So, other than Darren, right, in fact, we have quite a number of people who tell us their story via our YouTube channel. But before I start, I just want to make sure that you are able to hear me and see my slides over here, right? I've already projected my slides, so I just need my colleague's help to put on my slides so that all of you can see. Now, while the slide is coming up, now, just to check if you are able to hear me, right? Is it okay? Just type 1 in the chat box so that I can confirm that you are able to hear me. Yeah, because my colleague will be able to hear me because, we are so close, right? Yep, if you can hear me, is it okay? You just, sometimes take a couple of seconds to respond, right? Yep, so my colleague already said, good evening. Okay, it's all good, huh? Yeah, now, so before I start, let me just share with you, Darren's video is all recorded at our YouTube channel at this, let me just see, right? Yep, at this channel called youtube.com/Value Investing Academy. So this is our YouTube channel URL. And other than Darren, of course, there are many people from all walks of life. They have shared with us their story. For example, Darren was an ex-SAF regular, and then we have this lady, right? She's currently a scientist. Yeah, so even a scientist, right, who is extremely good in science, attended our value investing program. And we even have a mom and a son. And most of our graduates actually come from all walks of life, and I think I'm quite thankful that they actually shared with us their story, which is why we are able to, upload the story into our YouTube channel. Yeah. So just take note, our YouTube channel is youtube.com/Value Investing Academy, right? Yeah. So maybe I just need help to put up the slide. Put up the slide right now, so that the audience can see the slide. Yeah. Can the audience see the slide right now? Oh, because I saw my YouTube channel, I can only see myself without the slide. Is it? It's all good, huh? Yeah. So just to let you know that other than, of course, Darren and all the testimonial story, we do share case studies into some of the companies that we are very interested in. Now, if you want to know, you just need to go to youtube.com, right? Yeah, youtube.com. Wendy say today the audio sounds rather hype. Wow, rather hype because Friday is coming. That's why rather hype. Okay. So I want you to just go to that segment which is called VIA Deep Dive Series. You can see, the best stocks industry to explore and so on. So we actually do a lot of things, So for example, here, right, we talk about option trading. So even though we do not do option trading, I talk about option trading so that you stay away from option trading. And of course, for tonight's session, right, it's over here. So in case you watch halfway, you need to go off just to let you know that tonight's session is going to be recorded here on the YouTube, and you can always come back here again. And previously, just 11 days ago, we did this company called Shopee. Shopee is just a segment of this company called C Limited. Yeah, C Limited. And of course, we also do other things, TSMC and so on. So in case you're very unfamiliar YouTube channel, if you come to this part, you may think that this is only our videos. And then if you click on this button over here, you want to scroll to the right, you only see a few. Yeah, actually, I'm also quite curious. Where are the missing videos? Then I realized that there's a small hack, right? The small hack is you need to click on this button. Yeah, click on this heading. And the moment you click on this heading, you will see one whole list. Yeah, it took me a while to figure that out, right? Yeah, so actually the list of videos that we have dates way back to, I don't know, maybe about a year ago, where we talk about the Chinese regulatory storm because of this company called Alibaba. And we also did Tesla, the EV industry as a whole. We also did SIA and so on. Yeah. So right now, before we actually go into the company called DBS, let me share with you some of the Singapore companies that we have done, because previously you know, we constantly do all the companies that are listed in US. Yep. So in one of the video, right, we did a company called SIA, and everybody would know what's SIA, huh? And the reason why we did this, right, it was because during, I think, phase 2. I can't remember phase 2, 2A, 2B, or phase Z, right? There are many phases. But during one of the phases, our Prime Minister Lee, right, was saying, oh, you know, we got this vaccination traveling, VTL. Yeah, VTL, because it's VTL, right? And so the moment he announced VTL, suddenly the share price go up. Yeah, so I'm just thinking, well, he announced only the share price go up. He drink tea only. Suddenly things change, people keep out saying, wow, so I was thinking, you know, he announced only the share price go up. So let's look at SIA first. So this is like a recap, right, based on the studies we have done. So if you look at SIA, it doesn't make sense for the share price to go up because even before the pandemic, even before 2020, right, you can see that their income, right, their profits are so-so, not that fantastic. Okay, it was going up, but it was quite flat. And of course, during the pandemic, there's a short deal crisis over here. So the income actually dropped. So fortunately, I think recently it went back up again. And just to let you know that for the past 3 years, it has been negative. So if you just try to reconcile the fact that the income is dropping, is negative, is actually at a loss, on what basis do we support the fact that the share price will go up, right? So if I compare the share price, which is this jiggly line, right, as compared to a net income, you may notice that whenever the income falls, right, the share price will fall. Somehow there's some form of correlation over here. Yeah, correlation. Yeah. And then we also talk about other SIA. We also talk about this company called Palantir. And we talk about this Palantir is because I think about 1 year ago during the bull run, there's one YouTuber very famous, right? He recommended people to buy Palantir. So out of curiosity, I went to take a look. So when I look at this company called Palantir, you may notice that this dotted line over here, this marked the zero line. Zero line, which means that when Palantir was listed way back in 2019, this is a quarterly, it has never gained a profit. Now it's still losing money as of today. Right? So if the company is still losing money for today, it's quite difficult to justify that the share price should go up because it's losing money. And then if we compare the share price, is expected. If the company is losing money, I mean, over the long run, what do you expect out of the share price, right? You see the share price fall, and the share price fall because the company is losing money. But during the bull run in 2021, sometimes it doesn't, sometimes it's very irrational. Because if you look at this part where I've circled here, right, do you notice that there is a hype about this company? And when there's a hype about this company, the share price go up even though the company is still losing money. So it's quite dangerous now to buy anything here, right? Because it's the bull run. So it makes everyone a genius. So we have to be very careful. Now, so the share price during its peak, it was $39, and now as of this afternoon, it's about $8. So what does it mean, right? It simply means that if we pay too much attention on the influence video and we trust them too much, but it's not their fault, right? It's our own money. So whatever they say, we have to see whether does it make sense. So if you happen to buy at $39 and right now it's $8, you are sitting on a paper loss of a negative 79.5%. And it's quite difficult for you to make it back, right? Because in order for you to make it back, the share price has to go up. Sorry, let me remove this dollar sign, right? By 387.5%. So the reason why I'm going to show you this diagram is to let you know that losing money is quite easy. Making money is quite difficult. So that's point number one. Point number two is the share price, right? Always correlate with the profit of the company. Which means that if the profit goes up, the share price will go up. If the profit comes down, the share price will come down. So you have to be very careful. And then, of course, I think just 1 or 2 weeks ago, we did this company called Shopee, which is a segment, right, of SEA. So if you look at this company called SEA, wow, this one, if you put one ball here, right, it really rolls straight down. And then this is the zero, which means that the company not only is losing money, it's losing more and more money. So if the company is losing more and more money, are you sure you want to buy the company, right? But remember, during the bull run, which is during this period over here, right, everybody is a genius. Now, if you look at the share price during the bull run, do you notice one thing? The price has gone up against the fundamental, right, where the company is losing money. This is very dangerous. So, of course, you may think that you're very smart. You want to buy here and then sell here, right? But who can do such a thing, right? Even Buffett cannot do such a thing. So, In the very beginning of the very short crisis when the pandemic struck, it was about $38. But remember, it was bull run. Everybody was expecting something nice. As long as some good news, right, the share price just go up against the fundamental. So you go up, I think maybe like 8 or 9 times. Wow, that's a lot, right? That's a lot. But this is a dangerous game because the company is still losing money, right? So you see what happened when the reality kicks in. Investors realize that this is not a super stock like what most people has like promoted it. So you see the share price right now has gone down from $360 to $66. So that's a whopping, right, negative 81%. And just to break even, the share price right at the bottom, just to go back to his, like the most recent high, it has to go up, I don't know why there's a dollar sign, it has to go up by 445%. Yeah, so again, losing money is quite easy, making money is very difficult. So let me just share with you some of the learning lessons first before we go deep dive into the DBS. So the first thing is, remember, you have to be very careful even watching this video of mine. Yeah, so we want to be as factual as we can, and sometimes you will see some videos people say, oh, this stock 10 times. We have to be very careful. So remember, right, if someone promotes just sharing with you the revenue, this is quite dangerous because revenue is vanity and profit is sanity. So you have to be very careful. Learning lesson number 1. Learning lesson number 2 is a very good lesson shared by Peter Lynch, and he once shared that the share price correlates or follow the earnings or profits of the company, which means that if the earnings go up, earnings means profit, if the profit goes up, the share price will go up because there's some fundamental to support the price, right? Which also means that if the earnings drop, the share price will drop. So the best way to invest is not to predict share price because nobody can. So the best way to invest is to buy a company with a durable competitive edge. And then that will help you to ensure that the earnings will go up over the long run while you sleep. Yep. So what I'm going to do is I'll need a colleague of mine, right, to play a very short video by this guy called Peter Lynch.
The price of a stock will follow the direction of earnings. In almost every case, you can generally state that if a company's earnings go up sharply, the stock's going to go up. If earnings go from very poor to mediocre, the stock's probably going to rise. If they go from mediocre to good, it's probably going to have another rise. If it goes from good to excellent, it's probably going to have another rise. Or if a company's earnings grow dramatically over a long period of time, the stock's probably going to go up dramatically.
Okay, so ladies and gentlemen, welcome back. Now, just to let you know that this gentleman over here is a very famous growth investor, also a value investor, and his name is called Peter Lynch. Yeah, he was once the fund manager of this very big fund, right, called Fidelity Magellan Fund. Yeah, but anyway, if you pay attention to what Peter Lynch had just said, what did he say? He said that the share price, right, always follow the earnings of the company in its own way. Profit goes up, share price go up. So this is a very important lesson. Do not predict share price because nobody can. And then the next one, remember, right? Avoid companies where the share price go up, right, while the profit is falling. So in other words, the KPI is very lousy, right? And for some strange reason, which cannot be explained by science, the share price go up. This is a very dangerous game. So just now, I already shared with you some examples where the share price go up, but the profit keep falling, right? So lesson number 3. So lesson number 4, this is just my thought, don't get angry with me, right? I think we should spend less time, right, following influencers. Yeah, because if you look at the Singapore's Forbes list, I don't think you see Wee Cho Yao, buy a stock because he watched an influencer video. So you have to be very careful. But if you enjoy this, I think it's fine, right? Because it's your time. But I think the key thing is please do not follow them blindly. They ask you to buy A, you go and buy A. I think that's quite dangerous. So ultimately, we want to have a mind of our own, and we all want to be an intelligent investor. So these are very important things before we talk about DBS. And remember, right, you already know that today is all about the bank, which is called DBS. But before that, remember I shared with you all these things very factual. Yeah, so that when you listen to us, you have to also accept, does it make sense? Okay, don't anyhow buy, right? And then, of course, on the 19th of August, which is just, I think about almost a month ago, there's this famous Stephen Ling Kor Kor. Is quite a cheeky and cheerful person. Yeah, so on one of his YouTube video, the interview is quite long. I think it's about 20 plus minutes. He did share that he sold his HDB recently. I'm not very sure how recent it is. And then he got, I think, about $300,000 of cash. And then he was quite happily saying that he used this 300K and then to buy this company called SingPost. Yeah, then after that he laughed. So I'm not very sure why he laughed. But anyway, I was thinking this is this is quite dangerous. I don't have the courage to do this. But let's look at Singpost in a factual manner. And if Stephen Lim Kok is my friend, maybe I should email him this slide, right? So you can see this is a Singpost net income. Net income is earnings. Earnings are profit. So if you look at it, and you draw a line that cuts across, I think the profit is coming down. Luckily, it's still not losing money yet. It's dropping. So this is the zero line. So remember, right, the lesson from Peter Lynch, when the profit is dropping, you will expect the share price to drop. So let's look at the share price and see did Stephen Lim make some money or not. Yeah, so remember, right, the earnings, which is this line, if it drops, you cannot expect the share price to go up, so the share price also drop. Yeah. So I was trying to check when did Stephen Lim Kok bought the Singpost. But unfortunately, the video didn't state exactly when, right? So the video that I saw was dated 13th of June. Yeah, and then after that, he said recently. I would assume that it has to be before 13th of June that he sold off his HDB flat and then he bought Singpost. Which means that he would have bought it higher. But I do not know exactly when. So I'm going to use the video, right, which is dated 30th of June, and assume that the day of the video, he bought Singpost. So one share will be 66 cents. So as of this afternoon, it's about 58 cents. So I think not that bad. It's not 5 cents, right? Yeah, but it's 58 cents. So the share price right now has declined about 12%. 12% is still not that bad. Not that bad, right? Yeah. So in order for Stephen Lim Kok to make money, right, remember the profit has to go up so that the share price will go up. Yeah. But if you look at Singpost, whether the profit goes up is really quite hard to say. So right now, he just got himself into a predicament. By buying a mediocre company, and I suppose it's an overvalued price. So he has to be very careful. Yeah. So if you really want to understand more about investing, I think it's important for us to choose the right channel. And our channel is again a Value Investing Academy, at YouTube channel. So what I'm going to do is I have just flashed the QR code. So I just need your help to maybe just take a phone and scan this for a short while, right? Oh, by the way, while you're scanning, just to let you know that our subscribers originally started from about 2.5K, about 2005. Yeah, so right now is 12,000. This is a bit not so updated, right? Yeah, so previously it was 2.5K, so right now it's 12K. So I think the number of subscribers has gone up about 500%. Yeah, and I think I want to attribute to the team, right? So while you're scanning, attribute the team. One is our in-house producer, which is Susie. I think when, she's quite happy. Every time I mention her name, she own self, praise own self, right? But I think that's the truth. So I think ever since Susie joined us, I think about a year ago, I think things are going the right direction. So that's one. And then the second person I think is actually Hillary, right? Hillary, later on she'll share about the DBS. I just want to give some really positive comments. Is because Hillary, despite a background in chemistry and biology chemistry, right, she really put in a lot of effort. So later on, when the camera shifts to her, you look at the slides, wow, my goodness, I think that's a lot of effort. So I think if I take Hillary and Susie out of the picture, I don't think we would have progressed this much in terms not only the number of views, but also the subscribers. So I think in front of this around 150 people, I just want to show my appreciation to Susie, right, who is right now eating some biscuits, and and Hillary. Okay, good. So two good, very good people. Yeah. So moving forward, our job, of course, other than the YouTube channel, our job is to share with you some knowledge, so that you know what to do, right? And of course, most important, you also need to know what not to do. And cash, you have to go and figure that out, right? So recently, which is about 13th of September, I came across this article by Mothership, and it says that some Singaporean, some people actually queue up 4 hours, just to get the interest that is 2.7%. Now, I'm not very sure this 2.7%, what does it mean to you? And if you look at the profile, some people may thought that it's auntie. So this one looks like auntie, but this person, I don't think so, from the back. And this person, I don't think so. So if you look at all this person, I don't think we can generalize that people who queue up are mostly senior. So unlikely. And then when I read the article, right, they talk about people in their 30s who are accountants. They talk about people who are in their 40s, right, who are financial analysts. So I'm trying to reconcile all this. But I think it's okay if some of the interest that they're drawing 1%, if they want to queue up going for 2.7%, I think it's fine. 2.5% is fine, right? But there's one thing I just want to share with you. But this is my opinion. This is not really This is just an opinion. Now, I'm not very sure whether you have seen this before. Yeah, when I was a little kid would be maybe more than 40 years ago. You know, my class teacher actually distributed this pamphlet, yeah, issued by POSB. Yeah, so they want to encourage students to save. So they will ask a student to buy like 50 cents of stamp, $1 of stamp, and so on. So when we buy, right, the teacher actually issued the stamp to us. So we are supposed to take this stamp and then stick on it. Yeah, after we stick on it, I think we're supposed to bring back home, something like this. So next week we're going to come, or next month we'll come. Yeah, so to encourage saving, we have to buy the stamp, and then we have to stick as much as we can. So as a kid, we realized that it's quite fun, right? Because it's like sticking a sticker. Yeah, but right now I have no idea where's my pamphlet. Yeah, so I think it's gone. I don't know where is it. But the point I wanted to make is banks, right, or financial institution has always encouraged people like me, you know, when we are young, right, to save. But the irony in life is banks don't do what they tell us to do or what they have told us to do. Now, let me share with you an example. But this is my comment, right? So in the next 1 minute, I'll sound a bit like Robert Kiyosaki. Now, so this is how it goes. Remember, right, we were told, or we were once told as a kid, we were told to save, right? To save, save $1, $2, $3, put in a piggy bank, and so on, right? So now the question is, we want to save money. Who do you want to save with? Where should we put our money, right? Of course, the by default setting, if we want to save money, we want to make it safe, right? We will put it in a bank. So we put it in a bank because we assume the bank has a safe, so our money should be safe with them, right? Yeah, but the interesting thing is, if banks are the one who inculcate this habit that we are supposed to save, right? So the question is, do banks save money themselves when we save the money with them? Okay, so that's something we need to think it through. So let's say we save our money with DBS Bank, in which we want to talk about today. So actually, technically, banks are borrowing money from us, because when we deposit money into DBS Bank, the money do not belong to DBS Bank. So they actually borrow money from us. So when they borrow money from us, they should pay us something, right? So they pay us something called peanuts, or sometimes known as interest. Yeah, so that 2% that you queue up for, right, is this peanut, no? Is this peanut, right? Yeah, so they take our money, give us peanut. So what do they do with our money, right? What do? There are two things that they can do. Number one is they lend it out. Yeah, they lend it out to somebody else. For example, SMEs, businesses and so on. So of course, if they pay you, let's say 2%, they may lend up, let's say 10%, they may lend up 8%, whatever percent. Obviously, here must be bigger than here, right? Okay, but you may notice that when they borrow money from you, they do not put in UOB. DBS quickly go UOB and deposit, then UOB go CBC, then this thing go round and round, cannot be, right? Yeah, doesn't make sense. Then the second one, of course, they take your money and then they invest in something else. Yeah, it all depends on what's their business model, right? They may buy some stocks, they may invest in startups, other businesses or whatever. But you will never see, number 3, save with OCBC. Okay, So what am I trying to say? I'm trying to say is banks tell you to save, but they themselves don't save. Yeah. So if our endpoint is to make money, right, we have to ask ourselves, do we want to save all our money? Maybe a portion needs to be saved, but do we need to save all our money? Or can we own a piece of the bank? Now, if you have watched the movie called Batman, right? Yeah, Bruce Wayne, one of the billionaire in the movie. Yeah, I still remember there was one time, what was it? I think there was a scene, a very short scene where Superman and Batman, right, they were walking along like a ranch. Yeah, so the Superman was talking to Bruce Wayne. He said, hey, how do you manage to get my house back? Because my house was with the bank. So Batman said, I bought the bank. Yeah, so what we want to do is we do not want to save our money with the bank, but we want to buy the bank. Yeah, buy the bank, So who will be richer with us? Is it the one that queued up 4 hours or the one that bought the bank, which is Batman? Yeah, so if you look at this two, I think the more reasonable answer will be number 2. Yeah, which brings us to the part whether we want to save money with DBS Bank or we want to take the money that originally we want to save, we take a portion of it, and then we own a piece of the bank. Yeah. So what's going to happen next is we are going to move straight to the DBS Bank. So remember, right, a DBS Bank, everybody knows it's a Singapore bank. But before we transition to Hillary's side, so I need to read out this, read out this, right? Yeah. So this one must chant, I must chant this whole thing. Yeah. Actually, I was also quite tired reading this disclaimer, but I think I better read. So remember, right, Hillary spent her entire life trying to tell you DBS. So remember, tonight's session is solely to illustrate the application of value investing methodology and various valuation methods in the context of real-life companies, which is DBS. So remember, even though we talk about DBS, we are not recommending you to buy, right? Because we do not take into account individual characteristic of you. We have not seen you before, your profile or the risk appetite. So remember, right? Neither My Kinesis Investment, VIA, nor Authors, which is me and Hillary, are operated or affiliated with any broker, dealer, or licensed financial advisor. So in short, we are not licensed by MAS. So we cannot say, suggest, you better buy this, and so on, so better not. Huh? So remember, right, neither VIA nor Authors make any representation or warranty to the completeness or accuracy of the information in this case study. Okay, so I'm going to do some transition. The camera is going to shift and so on. We're going to pass it to Hillary. But while we're doing this transition, I need your help, right? Now, you may notice that the YouTube has this thumbs up. Thumbs up. If you don't mind, while we're trying to fix this camera moving left and right, can you just help us do the thumbs up? If you don't do a thumbs up, our camera will not move. Okay, so can you please do the thumbs up right now while we are trying to pass our microphone to each other, right? Okay, so I give you 5 seconds to do this, right? Yeah. Okay, so let's transition.
Okay, done? I'm on? Okay. Hi, good evening, everyone. This is Hillary here. So right now, we will deep dive into DBS Bank. So after Cayden has shared some information about the bank, so right now we will really deep dive like what really DBS do and how they actually earn money. Like what Darren had shared earlier, get to know more about the company. Okay, first of all, DBS is known as DBS Bank Limited. So it's a Singapore multinational banking and financial service corporation. And it's actually founded by the Singapore government in 1968. And it has a credit rating of AA- by Standard & Poor's and AA1 by Moody's. So what does this credit rating actually mean? It means that actually DBS Bank is a very high quality bank with lower risk of default. So that means when you put your money inside into this bank, you will not be afraid that the bank will suddenly close down or go into bankruptcy. So, which is why they are recognized as the safest bank in Asia for 13 consecutive years since 2009. And they also received multiple accolades from Euromoney, The Banker, and Global Finance. So you can see the icons that the accolades or recognition that they receive from these institutions. And now we also look at, it's actually listed on the Singapore Stock Exchange, and the ticker symbol is D05. So they actually acquired POSB in 1998 to expand their market share and also their client base. So you can see from the map, they have a total of 25 DBS branches, 46 POSB branches, and 691 ATM locations in Singapore when I was doing the research. So actually I got this from their website. So this is considered the latest as of now. And they also offered a wide range of financial products and services in 14 markets worldwide, which you can see on my left, on my right, the 14 countries. And they actually have key market operation in six countries, which is in Singapore, Hong Kong, India, Indonesia, China, and also Taiwan. So now we will look into their products and services that is being offered. So for DBS, they actually operate in 3 core business segments, which is consumer banking and wealth management that involves personal banking, premier banking, institutional banking, which is for corporates or SME, small medium enterprises, and treasury markets, which is for investment. So for the three key markets, we see that for personal banking and wealth management, almost all of them have these services except for China. They do not have personal banking. And for corporate and small medium enterprises, they also offered banking solutions to their clients. And for investing, we know that in Singapore, there's this DBS Vickers Securities where we can do trading on their platform. However, I put a question mark for Hong Kong is because when I was doing a research and looking into the Hong Kong website, they actually have DBS Vickers Securities. But when I click inside, I noticed that they actually offered CPF, SRS. So I was a bit curious that did Hong Kong also offered CPF there, but we will find out later. And then there's this DBS Tech India. So what is DBS Tech India? Later we will explore more in the future plan section. Okay, so for this deep dive series, we will mainly focus within Singapore. So the other is just a quick glance like what kind of services or products that they offer in those 6 key markets. Okay, so for consumer banking and wealth management, we will first look into consumer banking. So consumer banking is for the mass public for their everyday banking services. So they offered these banking services to the mass public, which is bank services, cards, like credit card, debit cards, insurance, loans, and also investments. And whereas for wealth management, it's actually offering the banking services for high net worth individuals. So for this, the DBS actually have 3 tiers. So the first tier is DBS Treasures, which is for individuals who has about $350,000 of investable assets. And DBS Treasure Private Clients is for individuals that has 1.5 million investable assets. And DBS Private Bank is for individuals that has $5 million of investable assets. So also, they also offered these banking solutions to these high net worth individuals. However, for wealth planning, it's only available for DBS Treasure Private Client and also DBS Private Bank because they have dedicated financial advisors to advise these clients how they should better manage their wealth or invest their wealth. Okay, next we will look into institutional banking. So earlier on in the previous slide, we saw that institutional banking has SME banking. So for SME banking, they are involved in 3 industries, which is food and beverage, healthcare, and also logistics. And these are the banking solutions that are being offered, like for the day-to-day operations for the businesses, like accounts, cards, payments, trade transactions, especially for import-export of the goods, loans, business insurance, security and fiduciary services are actually fund services that is being offered to the enterprises. Strategic advisory are financial advisors that provide financial advices to these enterprises. And treasury is actually investment services or risk coverage like hedging that is being offered to the enterprises. Okay, so next we will look into corporate banking. So for corporate banking, DBS actually is involved in 12 industries. So you can see from here, these are the industries that DBS has corporate with. And the solutions offered is the similar to SME, which is solution bankings. But for corporate banking, they also add on a digital solutions, which you can see here, like Patrio is a kind of blockchain-based payment, DBS Ideal, Fixed Marketplace, DBS Digital Exchange. So what are these all about? But later we will explore more in the future plan section. Okay, so for treasury markets and also others, this is actually the market division or the investment banking arm of the bank, where they provide the institutional or corporate clients the investment and also risk coverage needs, which is hedging. So what type of solution do they offer? First thing is Forex, foreign exchange, interest rates, investments such as fixed income products like bonds, equity ETFs, or some other structured products, and futures. So this is a kind of a derivative. So what is really a futures? So a futures is actually a contract or an agreement between 2 parties to say that when they wanted to buy certain assets or commodities, like when they wanted to buy sugar or when they want to buy coffee, and then they mention the price and date to make the payment. So this is another kind of derivatives. Okay, so next we will look into how does the bank make money. So bank actually make money from two main sources, which is interest income and non-interest income. So earlier on, Cayden have explained like what really is interest income. So maybe we will kind of have a quick refresher on how the banks make money from interest income. So first, you place your money inside a savings account and you'll be enticed to get a 1% of interest for putting your money in with the bank. Then the bank will lend that money to other people or businesses, which is the loans, and they will get back 10% interest when the people pay them back. So when they pay them back, so this is known as the interest income. So since they already got the interest from the borrowers, how about the interest that they promised you? So what they do is, you also get back your 1% interest, but they keep the remaining 9%, and this is known as the net interest income. So this is how they actually earn income via this route. Whereas for non-interest income, it is a fee and commission income, which means that these banking services and solutions that they provided, they're actually collecting fees. So it does not involve in generating interest from them. So here, when you see non-interest income, it really mentions about fees or commissions. Okay, so now we'll look into more numbers. In 2021, you can see that almost 59% of the revenue is generated from net interest income, then followed by net fee income and also other non-interest income. So here, the other non-interest income is actually the income from investment securities or tradings. Okay, so in Q2, the latest results, we also see that net interest income still contribute the most, which is about 62%, followed by net fee and commission income. Okay, so next we will look in terms of business segments. So in 2021, we see that actually institutional banking contributes about 42, then followed by consumer banking and also wealth management. Others are made up by treasury markets and also others. And we can see that for institutional banking, almost 4 billion comes from net interest income. So we can see that net interest income is actually the major bread and butter of the bank. Then in the latest figure that we have in Q2, so institutional banking still take the lion's share, and here it is still net interest income that contribute the most for the institutional banking. And now we will look into the geographical regions because DBS Bank has operations in 14 markets worldwide. So now we will look. So of course, DBS being said is a Singapore bank, so 62% comes from Singapore, then followed by Hong Kong, China, and also the Southeast Asia region, and also rest of the world. Okay, so for Singapore, we can see that almost 5.2 billion comes from net interest income as well. And we can see that from the other region, most of the income are also generated from net interest income. And in the latest result that we have, it is still from Singapore, and we see that the percentage does not change much compared to 2021. But the net interest income is still the main contributor income for DBS Bank. Okay, now we will look into their future plans. So first off, DBS is moving forward into digitalization, which they adopt technology to provide even better banking services and solutions. So first off is known as DBS Finovation. So what is Finovation? So from here you can see the chart. They actually has different parts of it like Palantir, Climate Impact X, and DBS Digital Exchange. So this one is actually set up in 2020. And also another digitalization that they has is DBS Tech India. Okay, so first off, Digital Exchange is actually a trading platform where people can like trade for digital assets such as security tokens or even in the future cryptocurrency. But currently, this is only available for financial institutions, professional market makers, not for individual investors. But for individual investors, it's only available for those who are having account in the private bank. That means the DBS private bank. Okay, next for Climate X, they are actually about carbon credits. That means they offset the carbon emission because right now people are getting more environmental conscious, so they come up with this. And for Palantir, it's a future payment by using a blockchain based. And fixed marketplace, this one is an automated fixed income execution platform, which means that the issuer, for example, maybe Capel, they wanted to issue bonds, they can use this platform to issue bonds directly to the investors. Okay, so for DBS Tech India, it is actually provide a digital transformation for the bank because they wanted to create a world-class engineering organization by using the latest technology to design and also develop the latest banking solutions. So these are some of the technology or engineering that they are moving forward to, like data modernization, journey to the cloud, emerging technologies, and site reliability engineering. So you can see that DBS is slowly moving towards more digital, providing more digital banking solutions like what we see in fintechs. Okay, next is overseas expansion in Asian markets. So for DBS, they are actually expanding rapidly in Asian markets. So for here in the research, I found out there's actually 4 markets they are expanding into. The first one is India, where they acquire the Lakshmi Vilas Bank. In Shenzhen, China, where they invest about 13% stake into this bank. And Taiwan, they actually acquired Citigroup. And for Hong Kong, they received approval for investment products. So now we'll look into one by one. So for India, the reason why they acquired this bank, LVB, is because they wanted to expand their footprint in the southern India and to scale up their consumer and SME businesses in India. And whereas for China, they are currently the largest single holder, which is a 13% stake into the Shenzhen Rural Commercial Bank, SZRCB, is because they allows them to accelerate their growth within the Greater Bay Area in Shenzhen, via Shenzhen. And in Taiwan, they acquired Citi Consumer Taiwan is because it is one of the best foreign consumer bank in Taiwan, and it will also accelerate the DBS Taiwan's growth by at least 10 years. So they don't have to organically grow in Taiwan, but they can acquire this group and grow rapidly in Taiwan. So for DBS Hong Kong, they actually received an approval to offer investment products and solutions to the customers in the Greater Bay Area. So earlier on in the previous slide, when I showed that there's the DBS Vickers and there's a question mark for Hong Kong, that is the reason why they are now starting to offer the investment products in Hong Kong, but it's still in progress. Okay, so now we wanted to know, like, what are the economic moats that DBS has? So economic moats is actually the competitive advantage that a company has over their competitors so that they can maintain their advantage over them. So first off, they need to have a banking license because without a banking license, they are not allowed to take in our money to store as deposit. And also brand loyalty, because DBS Bank has been in Singapore for quite some time. It has been established since 1968. And they also receive multiple recognitions. So when people heard DBS, they know that, okay, my money with DBS is safe. And also distribution network. So they are available in 14 markets, and there's the ATM and also branches are available throughout Singapore. So it's easy for us to like get our money or withdraw our money from the ATM or from bank branches. And it's involved in more than 12 industries. Whereas for switching costs, this one is a bit tricky because we compare between institutional and consumer. If the relationship between the bank and the institutional, like the corporates, the SME is good, then they might tend to keep using DBS Bank as their financial advisors or financial partners to do their money transactions. Whereas for consumer, because of the rise of the fintech, consumer might consider to switch to another bank which provides them more benefits, which we will explore in the next section. So for competitors, so we can see that there are a lot of traditional banks in Singapore, but for this deep dive series, we will look into top 3 banks in Singapore, which is DBS, UOB, and OCBC Bank. And this is the overall fintech landscape in Singapore in 2022. So some of the direct competitors, I would say, is payments, like they will compete against their non-interest income, such as the card payment. Because right now there's a lot of way that people can make payment to buy their goods and services, like for example, GrabPay, ShopeePay, or some other types of payment models. And also another thing is lending, because earlier on when we see the interest income, how banks make money, actually when this part is being taken from them, so this will definitely affect the bank's revenue. And another thing we have to take note is about neo-banking. So neo-banking is something similar to digital banking, but it is not digital banking. To find out more about what is neo-banking, you can watch our previous video in New Bank, which is really a neo-bank. Okay, so this is one of the latest fintech map that I have in 2020. I do not have 2022, but we can see that here is just a whole list of different fintechs they have. So you can see how competitive it will be for DBS Bank in order to move into the digitalization. So here are the payments, here are for the lendings, and here is core banking or neo-banking. So now in Singapore, recently we know that there's launch of 2 new digital banks in Singapore. So the first one is Trust Bank. So it's actually the banking license is being backed by Standard Chartered. And GXS is actually a digital bank by Grab or Singtel, but they just recently launched, but I do not have much information about what do they have or what products they offer. And the next one is C Limited, where they got the digital bank license, but currently they do not have any news on how they intend to set up the bank in Singapore, but they actually have banks in Indonesia and future in Philippines, known as C Bank. And also, Singapore government also offered the digital wholesale bank license. So wholesale bank is actually the banking services for small, medium enterprises, such as Ant Financial and also Beijing Cooperative Equity Investment Fund Management. Okay, so now we will look into the numbers of DBS Bank. So first off, we see the revenue of DBS. So for banks, the revenue is actually the total of net interest income and also non-interest income. So we see that since 2011 until 2019, it was in an upward increasing trend. However, starting from 2019 until 2021, we see that it actually stabilized and there's a slight downturn. So actually, what happened? So now we'll look into these 2 income. So for net interest income, since 2011 until 2019, it was increasing, but 2019 onwards, it was actually decreasing. Even though the non-interest income is increasing for the past 10 years. The reason is because we see here the revenue in 2021, almost 59 or 60% of the income by DBS comes from net interest income. So when there's a drop in the net interest income, it will definitely affect their revenue. Okay, so next we will look into their net interest margin. So what is net interest margin? This financial criteria is actually only for banks. So it actually measures the difference between the interest income generated and the interest expense that has to be paid to their lenders or depositors. Because earlier, if you still remember the chart that we showed you on how banks generate their income, because in order to generate this interest income, they need to first get deposit from us, savers, before they can lend out the money to the borrowers. So this is to measure the profitability of the interest income. Okay, so this is the formula, mathematical formula for net interest margin. So to keep things simple, if the net interest income increases, the net interest margin also increases. Okay, so now we will compare the 3 top banks of Singapore for the past 5 years. So we see that from 2017 until 2019, it was actually increasing for DBS. However, since 2020, because of the start of the pandemic, all three banks also encountered a drop in their net interest margin because there was a drop in the interest margin by the central banks. However, the overall average for the past 5 years for the 3 banks, DBS still ranked slightly better compared to the other 2 banks. Okay, now we will look into the net income. So the net income is actually the profit of the company. So here is actually, you take all of the revenue minus off all of the expenses, that will become the profit or loss of the company. So here in 2020, there was a sharp drop. But why this did happen? It's because there was a huge increase in their non-interest expense. So when we explore or investigate into their annual report, this one actually is because they increase in the allowance for credit, meaning that they increase the allowance for loans and advances for customers, because during the pandemic, not many people can repay back the loans that they borrowed, so which is why they increased the allowance for this. But nevertheless, we see that the overall trend is increasing if we ignore 2020. So based on the value investing methodology, we will consider this one is a good sign. Okay, so next, this cost to income ratio is actually a financial criteria for banks as well. So this actually assesses the profitability of the bank. So this is the mathematical formula for this ratio. So to keep things simple, we will say that if the cost for the operation decreases or the income increases, then this ratio will decrease. So the lower the ratio, the higher the profitability. So the average ratio is between 0.4 to 0.6. Now we will look into the average ratio for the American regions before the COVID pandemic. So for US, it's about 0.6, and for Singapore, it's about 0.4. So this is the average. This is where the average ratio comes from. And when we compare the three banks for the past 3 years, we can see that actually all three banks are within the average ratio. So for DBS, it's also within the ratio, which is about 0.44%. So this one is considered a pass based on the value investing methodology. Okay, so next is the loans to deposit ratio. So this one actually indicates how much the bank lends out its deposit to earn interest income, because it's unlikely that the bank have to loan out every deposit. So in case if for us, savers suddenly say that I want to withdraw my money, where are they going to get the money if they already loan out everything of the deposit? So the ideal ratio for the loan to deposit ratio is about 80% to 90%. So this means that if this LDR ratio is 80%, the bank loaned 80 cents for every $1 that they receive in deposits. Okay, so this is the mathematical formula for loan to deposit ratio, which is total loans divided by total deposits. And when we compare for the three banks for the recent results, we see that DBS is actually slightly lower compared to the other two banks. So based on the value investing methodology, and it is within the ideal LDR ratio, this is also considered a pass. Okay, so next we will look into non-performing loans. So what is actually a non-performing loan? Let's create a scenario. For example, Angela needs a loan, and then the bank will assess whether Angela is able to take up the loan or not. So after taking the loan, Angela is able to pay back the loan as planned, and this is considered a good loan to Angela. However, if something happens and Angela cannot pay back, and the bank cannot take back the money from the loan from Angela, so then the bank will have to take a loss. So this is known as a non-performing loan. Okay, so this is the mathematical formula for non-performing loans. So this one is actually to measure how much of the loans that the borrower has not been able to pay back to the bank for the principals or interest for the at least 90 days. So to keep things simple, if the lesser the non-performing loans that the bank has, then the lower the ratio will be. So based on value investing methodology, the NPL should be less than 6%. Okay, so for this one, we also compare for the three banks for this, and we can see that DBS has one of the lowest non-performing loan ratio compared to the other banks. Okay, so next we will look into their cash flow situation. So for this, we will look into their operating cash flow. So this operating cash flow means that the cash flow is generated from their normal business activities. And you can see this is the red line. So when it's a positive cash flow, that means there are cash coming in to the bank. And when it is negative, that means the money is flowing out from the bank. So we see that from 2020 until 2021, there was a sharp drop in their operating cash flow. So why did this actually happen? So again, we also look into their financial statements, and we noticed that in 2020, there was a huge increase in their working capital, but in 2021, there was a sharp decrease in their working capital. So this is one of the reasons why there was a sharp drop in their operating cash flow. Okay, so next, we wanted to know that other aspect of their cash flow. So we also look into the free cash flow, which is the free money that is available after the company has deducted the capital expenditure. So capital expenditure means the expense that the bank or the company uses to purchase assets that last more than 12 months. Okay, so here is the zero baseline, and here is where the current free cash flow that DBS has. Okay, so again, we look into the numbers and we notice that actually there's not much changes of the capital expenditure, but the sharp drop was because there was a drop in their cash flow operation. So whether will DBS Bank comes back from here, we are not sure, because if we draw a line across, it looks slightly like it is increasing, but because of the sharp drop, this is something we have to take note of. Okay, next we wanted to know how is the debt level. So for this, we will look into equity to asset ratio. Okay, so equity to asset ratio is actually determines how much of the company's or the bank asset is owned by the investors and not leverage. So based on value investing methodology, this ratio should be more than 0.07. And even though you see that there was a sharp drop, but actually it was a 0.01% drop. So for bonus, we will share with you like what really is equity to asset ratio. So this is the formula for equity to asset. And if we change to another form to how to write it out, we see that asset equals to liability plus equity, which comes from the balance sheet formula. So if there's an increase in the liability, this means that the equity to asset ratio will drop. And based on value investing methodology, this ratio should be more than 0.07. So for banks, what are the liabilities? So for this, to keep things simple, we will look into two aspects. One is the long-term debt, and then the other one is deposits. So this is the financial numbers for the equity to asset ratio. And we see that the past 2 years, it is at 0.08. So based on value investing methodology, this is considered a pass because it's more than 0.07. But to learn more things about this, we look into their long-term debt. So from here, we don't see any sharp increase in their long-term debt. So then we look into their total deposit. So we see for the past 10 years, we can see that there was an increment in deposit. So this is one of the reasons why the equity to asset ratio actually dropped for 2020 and 2021. But this is not a bad sign because more people are depositing money into the, DBS. So DBS may have more money to loan out in the future and generate more interest income. So based on value investing methodology, this is considered a pass for now. Okay, so now we wanted to know if there is any risk with DBS, because from what we see, it looks great. The numbers also looks good for now. So is there any underlying risk for this bank? So first is the high interest rate, because currently the interest rate is very high, and when people want to borrow money, they will think twice, because when they borrow money, they need to pay even higher interest for the loans. And when there's lesser people to borrow money, there may be lead to a drop in the interest income. So let's look at Canada. So Canada Bank has actually increased the interest rate to 3.25%. So it's even harder for borrowers to pay back. As a result of that, Canadian borrowers are actually turned to other forms of financial institutions to borrow money. So with that, the banks will lose out their customers as they cannot lend out money and earn interest income. And then the next one is competition from fintech startup. So earlier on in the slides for competitors, we see the overall map of the competitors. It's a lot of new fintechs are being started up. So with this, consumer may switch to a new technology that offers lower cost and also higher interest rate for savings accounts. So this is the latest news that I got today, where Trust Bank actually hit 100,000 customers within 10 days after launch. So why is a lot of people like signing up for Trust Bank? Even though Trust Bank is being backed by Standard Chartered, but still it is still considered a new bank. It's because first thing, the credit card that they offered, there's no annual fee, no foreign transaction fee, which is totally like not much fees is imposed on this credit card, which is very attractive. And then another thing for the savings account, not only they are feeless, but the savings rate is about 1.4%, which is quite high compared to the traditional banks offered. So this is one of the reasons why people are consider to open up a new bank account with Trust Bank, other than they provide additional benefits like they provide the link account where people can collect points when they purchase products in fair price. Okay, so to come to a conclusion, so DBS is actually one of Singapore's top 3 banks, and it has a credit ratings of AA- and AA1, which is considered a very safe bank. However, something to take note is with the current high interest rate, it may further affect their main bread and butter, which is the interest income. And also, they also have to compete with other fintech startups when they are moving forward to the digitalization of the financial products. Okay, so with that, I hope you have enjoyed this session and learned more about banks, and I will pass this back to Cayden. Thank you, everyone.
Hi, ladies and gentlemen, welcome back. You should be able to hear my voice, right? Because mine is louder than Hillary's. Just now somebody was saying that my voice, Hillary's voice was a bit soft, right? But it's okay, it's okay, huh? So let me just start transition, right, from where Hillary has left off. Oh yeah, well, a lot of people say thanks. Yeah. Hey, by the way, before I start, I'm not very sure how many of you spend your time watching other people's YouTube channel. If you spend your time watching other people's YouTube channel, you may realize that the stuff that we do, right, at least for the slides, do you realize it's very detailed? We show numbers, and so on. We break down into the business model, explain what are the interest income, what are the non-interest income. Even when it comes to ratio, right? For example, the equity to asset ratio. So you realize that Hillary has a breakdown. Okay, this is the formula. But over time, I realized that she's quite good. She said, okay, to put it simply, the top go up, come down. Yeah. Also, you notice we really went an extra mile. If you have seen other people's channel, you can see the difference. We are quite, how should I say, scientific and rational about things. So I guess because of our background, Hillary is a chemistry, right? Yeah, so A plus B equals C, I mean, that is it. Then I'm biology, so we're very scientific about things. Versus, I ask you to buy, you buy, I ask you to sell, you sell. So this is quite dangerous. So remember, right, the key thing in investing, and nothing is perfect, including marriage, nothing is perfect, right? So our job in investing is to lower the risk. Yeah, so how do we lower the risk? Number one, we must understand, right, what we are doing. Yeah, so Stephen Lee Koko say buy Singapore, you cannot buy. You must understand what Singapore is all about. Yeah, and that includes DBS. By the way, just to let you know that I think just about a day ago, somebody commented on one of our YouTube videos saying, just simply buy DBS. Well, this is quite a dangerous comment. This is quite, simply buy. What do you mean by simply buy? Yeah, I say, oh no, DBS Bank will not collapse. Yeah, sure. Now, but later I'll share with you, you cannot just simply buy just based on certain assumption that it will not collapse. Later I'll share with you some nitty-gritty. Now, just to let you know, there's still a possibility that you can still lose money even if you buy DBS Bank. And later I'm going to show you, Yep. So, correct, So, really, a lot of facts, right? So, remember, we must understand what we're doing. Even if by the way, banks, right? Remember, interest income, non-interest income, there's still some nitty-gritty, right? Yeah, so it's not so simple, Okay, so understand, right? Then the next thing is you must understand the numbers, which are the fundamentals. Yeah, and if you have so-called watch our previous YouTube live, right, you may notice that the criteria used for banks is very different from some other companies that we talk about, for example, TSMC and so on. A loan to deposit ratio, this is something new, right? Yeah, and it's very peculiar to the bank. So you cannot just happy, oh yeah, DBS Bank, just buy, right? So number one, you must understand the company, and you may notice that VIA, which is us, right, we went through an extra mile, do all the work for you so that, so that you don't lose money and anyhow press, right? Then after that, we also introduce the new criteria so that when you watch your investing time, you learn something, not just hearsay, hype, and so on. Yeah, but there's last one that's very important. Assuming that you understand DBS, assuming that you understand the fundamentals okay, you establish the company is good. So it doesn't mean that tomorrow when the SGX open, you quickly press buy. Yeah, because in order for you to make money, right, you want to buy the company as cheap as possible. But cheap is so relative. And to do that, you need to understand this term called intrinsic value. You need to know how to calculate the intrinsic value, right? Later, I'll share with you what's the intrinsic value of DBS. Yeah, so once you have established the intrinsic value of the DBS, which means that you know how much the share is worth. Right now, the share price, I think, is 33 or 34. So when we consider cheap from an investor perspective, is you want to buy below the intrinsic value, right? Yeah, because if you buy above, also die. Oh. So remember, we must make sure that you understand the business, yeah, DBS, understand the fundamentals, and later we talk about the intrinsic value. So you may notice that for every presentation that Hillary she always do the pros and cons because no company is perfect. Yeah, no company is perfect. Now, before I carry on, I just share a bit of experience. Now, when we deposit money, right, if you are a so-called individual, you're working in a company, most likely your money, right, will be deposited into the bank, and you are like their retail customer. So it's like B to C. So B to C. So you are the retail customer. Okay. But mine, right, because my company does have an account with DBS. Yeah. So they also provide a service to us. Right? So B to B. This is just a personal experience. I'm not very sure about other business owner, right? So for example, if I have an account with a DBS bank, right? For me, unlikely I want to switch to OCBC or UOB. Yeah, unlikely. I think partly the reason is because we got certain device from them. For example, when we do transaction, we got this credit card machine. So my credit card machine is actually DBS from DBS Bank. And in order for our customer, right, to get installment, right, yeah, it has to be attached to the bank. Yeah, so there are a lot of things that's being attached to the bank account, which means that if I decided not to use DBS Bank, I have to close the account and then transfer all my money to OCBC or UOB, and then when a customer come with a DBS credit card, and they say, Cayden, do you have the machine? I say, don't have. Wow, this is quite troublesome. So to me, my personal take is, if I have a SME account with them, enterprise account with them, unlikely I'll switch. So there's some form of stickiness. So that's one. Yeah. But for retail, right, maybe a bit of trouble, but maybe. But for me, because I think 0 point something percent, 1%, it's not worth for me to switch. So I have been with DBS Bank for quite a while. But when they want to make money out of me, it's a bit difficult. Even though when I swipe the credit card, because I pay my bills on time. Yeah, so I think they have to make money with somebody else. Okay, so that's more of a personal experience. So I think they have some level of high switching costs, and the high switching cost relates to the moat. So that when SME have an account with DBS, unlikely they will change, at least from my perspective. Now, so of course, let's go back to the comment where one lady to be specific, she was saying that, DBS Bank cannot close, just buy lor. Wow, so just buy, right? But the question is when, you see. Let's assume that let's assume the company is good, but it's when. So let me just share with you I want to share with share price, but before I share with you my thoughts, let's play a game. We usually play this game for those people who have watched our YouTube live, so that all of you become an intelligent investor. Not I say you buy, right? Now, so I'm going to give you 5 seconds. So I'm not very sure Susie is going to do a poll, right? So we're going to do a poll, right? So later on the chat, you should see a poll that pops up. Now, I'm going to give you like 5 seconds to think. Yeah, assuming that you listen to Hillary's presentation. Yeah, which basket, right, does DBS fall into? Do you think that DBS fall into a low risk, high return basket, or do you think DBS fall into a high risk, high return basket? Yeah, or do you feel that a DBS fall into the high risk, low return basket? So it's either A, B, or C. So the poll is out, right? So I'm going to give you like maybe 5 seconds to play with this, yeah, and so on. So you just choose A, B, and C. I think this thing is quite live, right? The number will jump about. Yeah. So my colleague is going to pass the result to me, right? Oh, okay. So I'm going to write the results out. A is 91%, right? And then B is 7%. Thanks. And then C is 0%. Okay, good. So by the way, this so-called three-letter basket is actually Charlie Munger's framework. Charlie Munger is a vice chairman, right, of Berkshire Hathaway, and then Berkshire Hathaway is Warren Buffett's company. Very good. So the poll result has been out. Yeah, so most of you have choose this low risk, high return. Yeah, low risk, high return. So I don't think it's a high risk, low return. I don't think so. This is my personal opinion, right? So I don't think it's high risk, high return. Yeah. So of course very good. A lot of people post the result. So the most likely is A lah. Is A. Yeah, it's A. So now the question is it true? True. Now before I carry on, in order for DBS to be classified under this basket A, yeah, to be of low risk and of high return, you have to buy the stocks of this business at a low price. Because if you buy the stocks of DBS at a high price, super high price, it could be a high risk and low return. So why am I saying this? Now remember, right, DBS can fall into any of this basket, whether A, B, or C. Yeah, other than being good, right, there's one more variable, which is the entry point. Entry point, if you screw up this entry point, yeah, you will end up with a C. Okay, so I'm going to show you the graph. Yeah, and this graph is just to share with you the share price of DBS. So it doesn't mean that you chin-chai buy, right? You chin-chai make money. Okay, so ready? So these are the share price of DBS. So first thing, right, I think we need to establish that no one can guess share price correctly, and that includes DBS. No one can guess price correctly. Yeah. So if somebody say, DBS, just chin-chai buy, right? Well, it's quite dangerous. For example, right, you may buy here, correct? You may not buy at the peak. You may buy here, right? Then the moment you press buy, this one drop. And then when this one comes in, you may say that, oh yeah, you hold. Yeah, easier said than done. Now, in between, when share price drop, people do silly things, such as something called cut loss. Okay, easier said than done, because you see all the share price going up, of course, you say you hold, right? But in reality, when you buy here, it goes up, you feel happy, right? And then when the share price falls, you feel sad, right? And then you have no idea where it's going until here it reaches the abyss, right? So if you buy here, sell here, even though it's a good company, also die, right? Okay, Or you buy here, sell here, also die. Or you buy here, sell here, also die. Or you buy here, sell here, also die. So it does not mean that when you buy DBS, sure make money. Okay, because it depends on a few things. Number one, your entry point, yeah, and the exit point. Okay, so that's one. And the second thing, right, which you need to note is what's your time horizon. Yeah, because if your time horizon is short term, you want to do a short term trade, you buy already maybe 1 month, 2 months, 3 months, you want to sell, then you end up with such a scenario. Yeah, so it's quite difficult for people to hold a stock of a business for 10 years, 20 years. It's very difficult. Yeah, so people tend to trade. Yeah, which is why even sometimes people will still lose money buying DBS Bank. Okay, so one more time, no one can guess the share price correctly. Yeah, in order for you to make money, even out of a business that unlikely is going to go bankrupt, you still need to know where's the entry point and the exit point. And to do this, you have no other way but to calculate the intrinsic value. Later I'll share. Then also depending on time horizon, you buy DBS Bank, suddenly the share price collapse. You cannot just sell, right? Cut loss. It's quite dangerous. Yeah, so David say low risk, low return. So don't worry, I'm come to the part, right? Yeah, so here, right, some people say I just buy or this is quite dangerous. This is quite dangerous. I mean, where to buy, right? Where to buy, Now, just to let you know that about 2 years ago, on the 29th of July 2020, MAS calls on local bank, which is the DBS, OCBC, right, to moderate the 2020 dividend. So in other words, MAS wanted to cap, right? Cap, like put a ceiling to the dividends. And the reason why MAS, the intention of MAS trying to implement this policy, right, is because pandemic is here. They worry about the bank's cash flow. Yep. So they say, hey, don't pay so much. And when you don't pay so much, you got some cash in case something happens. Nobody know the idea how this pandemic is going to go. Right? So they kept. And the moment when MS make the announcement, give a guess, what happened to the share price? Yeah, even though it's a good company, right? You see, investors or rather speculators, they buy based on news. Good news, buy. Bad news, sell. So this one is bad news, right? You see what happened? Yeah. MS introduced a cap in June 2020. Unfortunately, I do not know what's the exact date. Now, so here, it make the announcement, MAS cap dividend. Yeah, so the moment they make announcement, you see the price drop by 15%. But the company is still making money, right? So why should the price drop, right? So do you see this discrepancy? Yeah. So it drops to this part, which is $19. So from 23 to 19. Yeah, but of course, at this zone, right, what should you do? You should buy or sell. Like for example, of course, you see here, you say, yeah, okay, then just buy. Yeah, easier said than done. But at this point, when you press buy, the share price may drop into $10. Nobody knows. Which is why when you want to invest in the business, you need to look at the fundamentals, not look at the price. Because price tells nothing about the business. When the price drops by 15%, doesn't mean that the company is losing money, right, by 15%. Does it make sense? Yeah, so we only look at the fundamentals so that when the internal KPIs go the right way, the price in the long run will go the right way, which is why the time horizon is very important. Which also means that if you buy here, based on watching a YouTuber influencer video, right, and then you sell here, also die. Correct, huh? So people can lose money even though they're investing in a company like DBS. Okay, huh? Yeah, then of course here people say just sell. The same fella may say, oh, right now sell DBS. Yeah, so what do? You sell here, and then the share price go up, and then you sell here, the share price go up, sell here. My goodness, so where should you sell, right? Okay, huh? Then you see what happens. Then MAS say, yeah, no need to cap already, you know. Okay, so MAS leave the dividend cap. Oh, so now it's good news, right? You don't just have bad news, people sell. Right now, oh, it's a good news. So you see what happened, you see what happened. It's very interesting, huh? You see, it just now was here, right? So bad news, right? Bad news here, huh? Bad news. Okay? Then the good news come in. So the good news come in here. So when the good news come in here, do you see the share price go up until here? Can you see? Yeah. So what? Here you sell. Then after that, what happened? Or here you buy. It's really difficult. It's really difficult if you do not know how much each stock is worth for DBS Bank. Now, so what? Just buy? Cannot, huh? So remember, right, never say something like, oh, you know, UOB just buy, OCBC just buy, you will not collapse. Cannot, huh? Cannot, huh? So remember, right, Peter Lynch has already shared, even though the share price follows the profit, you also want to buy at a cheap price so that you have low risk and high return. But for DBS, if you buy at the high price, it's going to be high risk and it's going to be low return, and that's not what you want. So remember, you have selected A is correct provided you enter at the correct price. So right now, what's the correct price already? Now, this is another diagram to further demonstrate that when the internal KPIs go up, go the right way, the price will go the right way. But sometimes the price screw up a bit, and it gives you some form of discrepancy, such as this zone. Do you see the company is actually not losing money? It was okay, it was stable, but the price dropped. So in other words, you can buy a valuable business at a discount price. Okay, does it make sense? Okay, let's do one more. So this zone, you see, DBS is making more profit. Yeah, but the share price dropped, you see. So right now you can buy something that's worth a lot more, but at a cheap price. Cheap price, right? Let's do the one last one. This one, yes, the DBS profit did drop during the pandemic over here. Yeah, but the share price dropped even further. This is like suicidal. Correct, huh? So it's so much discrepancy. The profit just dropped a bit, but the price dropped a lot. So the value investors will come in during such time. But doesn't mean that you need to buy here and here. You still have to know the intrinsic value. So what's the intrinsic value? Is the intrinsic value here? Is the intrinsic value here? Is the intrinsic value here? You have no idea. If you do not know, yeah, chin chai just buy, right? It's deadly, it's suicidal, right? So let me just show you one more. Now this is the intrinsic value. This is a quick one. So actually when Hillary was doing, I was thinking, should I tell you the intrinsic value? So eventually, I did a graph, right? So let me just explain this. If you want, you can take a screenshot. Now, remember, we want you to be an intelligent investor, not chin chai, just press, right? So we need to explain to you, there are many ways of valuation. Yeah, ideally for banks, we want PB maybe less than or equals to 1.2, right? So just now I just checked, it's a 1.4. 1.4, So based on PB, I don't think it's undervalued, okay? And because I don't think it's undervalued, you may not achieve the low risk high return. Okay, so that's one. But look, let's look at the future cash flow, right? Now, if you look at the ability of DBS to produce earnings, from the graph looks very nice. First point is 1.57, and then the last point, right, is 2.61. So, for the past 9 years, if you look at the growth rate of DBS, it's not really a fast growth company. Fast growth, we expect this to be more than 20%. They are not like Amazon. Yeah. But you must accept that when you invest in a company like DBS, what you want is not the growth. Yeah, what you want is the dividends. Yeah, so for a company like this, you need a dividend to be more than 3%, right? Otherwise, don't know why we are buying. Okay, So you realize that the past is 5.8, but I put a very optimistic. I could have chosen to be 5, right? But I chose 6. So what does this mean? It simply means that DBS in the next 10 years, it will grow at 6%. Yeah, I don't think it's going to be 60%. I think there's no evidence. Yeah, and then remember, Hillary still talk about the competition. So here I'm being quite practical, right? Yeah, and then I further assume that in the next 10 years, because DBS unlikely will close, yeah, it's going to grow at 6%. So now it's the graph, our projection, right, is the first 10 years, every single year it will grow at 6%, and then after that, the next 10 years, you will grow another 6%. Yeah, this is pretty optimistic, yeah. I'm not very sure, can I do a 10% or 20%? I think there is no evidence. Then usually, typically, I do a margin of safety of 30%. Yeah, in case our assumption is wrong. But I put 10, which is very conservative. Yeah, so this number is optimistic. This number is optimistic. This number is optimistic. I end up with a target buy price of 32. So I think maybe anyone can just help me check DBS share price, right? I think DBS share price is $34, if I remember correctly. Maybe I need Hillary to help me check. Yeah, 33.3. Okay, $33. Yeah, so what does this mean? Yeah, 33 is very close to 32, right? So with optimistic estimate, DBS is at a fair value. Fair value. So if we apply what Buffett has said, in other words, Buffett would rather buy a good company, a wonderful company at a fair price. So in this case, DBS fall into his quote, where we want to buy a wonderful company at a fair price. But because we are buying at a fair price, unlikely the share price will like fly up. Yeah, because you buy a fair price, you're not buying at a cheap price. So how do we know, right, how far this share price can go? It all depends on how fast the company can grow the earnings. Now remember, right, Peter Lynch has shared, yeah, when the earnings goes up, when the earnings do well, the share price will do well. Which means that if the earnings, the future earnings, let's say they grow at 6%, yeah, you cannot expect the share price to go by 20%, right? Cannot. It doesn't make sense because you only grow at 6%. How can the share price go up by 20%? Yeah, so share price over the long run correlates with the growth of the earnings, which means that if the earnings grow by 6%, there's a high probability that the share price will only go up by 6%. And if you want to make more than 6%, you have to buy at a much cheaper price. And to do that, there's nothing much you can do, right? You can just wait. But if let's say die, just for illustration purpose, it's not a recommendation, right? Let's say tomorrow when SGX share price go up, when the SGX open, you can press DBS, right? And I already shown you that the growth is about 6%, and then let's say the dividend yield is 4%. Yeah, so the return of 4 plus 6, if you buy at fair value, right, most likely in future your gain may be about 10% per year. But of course, if you're happy with this, because right now you are investing in the business that unlikely go to zero, right, then how should I say? Then I leave it decide whether it makes sense. Okay, Yeah, inflation 6%. I mean, what to do? Yeah, what to do? So this is what I can share with you. Then you go and think it twice. But I think from an illustrative perspective, what I will do, I will still prefer to wait. Because if my board want to go into the basket one, I want to have low risk, high return. I want the price to drop further so that I can buy at a cheaper price. But that's me, right? That doesn't mean that has to be a decision. Okay? So remember, we share the logic, right? Share logic. Then some of you may be thinking, well, I spend 1 hour watching this, then fair value, that kind of thing. Yeah, but people want to talk about DBS, so I think I better talk about DBS. Now, but I think the key thing is DBS is only one of the 700 businesses that are listed in SGX. There are still many other businesses. Huh? Now, just to let you know that this afternoon I just spoke to one lady. I think the lady should be a few years older than me. Yeah, older than me, right? So we had a very short conversation. So what happened was this lady shared that she joined our 4-day value investing program in 2015, 2015. That was like 7 years ago. She said before 2015, she was losing money. Yeah, she was trading like me, like in the early days, she was trade, right? Buy, sell, buy, sell, buy, sell, right? And then she only started to make money consistently. Yeah, after 2015, when she has finished our value investing program. So, which means that before 2015 losing money, after 2015 onwards, for the past 7 years, she has been generating income right consistently. And overall, her portfolio is positive. Remember, she has been making money for 7 years. It's not a luck, it's not a luck, right? Bear market bull, she's still doing well, right? Doing well. So she has graduated from our value investing program. But of course, there's one more thing. She said that she's also our case study subscriber, both for US and Singapore. Yeah. So what's going to happen is, if you look at this list on the left, right, there's a number 1 to 34. Now remember, if we want to have low risk, high return, we want to invest in the business at the cheapest price possible. And that is best during the pandemic. So when the pandemic took place in 2020, now remember, I have no idea how long this pandemic will last. But I do know that share price has collapsed. So what do? Me and a team of authors, we start to do research on both US and Singapore. The list that is shown here are companies that are listed in the SGX from number 1 to 34. Now in Singapore, right, it's very difficult to find good companies. And those shaded in yellow, can you see, we even calculate the intrinsic value for our subscribers. So that those that are in yellow are companies that are still undervalued today. So DBS, I mean, we just need to wait. But other than DBS, let's put it aside. We don't have to, there are many other things better than DBS. So in this list, at least in our database, right, in total, since the beginning of the pandemic, we have actually discovered, in addition to DBS, we have discovered a total of 34 companies. And as of this afternoon, 25 companies, which are 74%, that are still undervalued today. And only, as a value investor, only when we buy the companies at undervalued price, then our basket will go into A, where we have low risk. Remember, right, low risk because we are paying at a low price, high price, high risk, right? Yeah. Then when we buy the low risk, the ROI will be high. Okay, So now out of this list, about 2/3, right, are still undervalued today. Yeah. So I'm going to give you an opportunity to gain instant access to this database of ours, which took us almost two and a half years to figure that out. Right. Now, so let me just share with you, it's not easy, even though in the SGX, the number of companies are just 700, but it's not easy. Because do you know where to search for opportunities? How to evaluate whether a company is good or bad? And for example, right, Hillary spent quite a number of days trying to assess DBS Bank. And then if you do not have any accounting background, like the lady I spoke to this afternoon, it's going to be quite challenging. You will chin-chai buy, right? So even you chin-chai buy for a good business like DBS, you can still lose money. Which is why it's very important for all of us, me and you, to know where is the entry point and the exit point, so that we have low risk and high return. And nobody know everything. Yeah, nobody know everything, right? Which is why during the pandemic, we formed a team of authors, yeah, to do all the work for you, right? So that we do the searching process for you, so that it saves time. Yeah, we evaluate the company for you, so that DBS, is it good or bad? Oh, and one more thing, recently a UOB bought back their own shares. Yeah, then among the community, some people say, hey, maybe we should buy UOB. Wow, this is also quite dangerous. This is quite dangerous, right? So number one, remember, you must understand whether UOB is it a good bank or bad bank. Yeah, even if it's good, you must entry point, right? Entry point here, which is why gauging the intrinsic value is very important. And lastly, right, you cannot show hand like Stephen Lim Kor, right, into SingPost or all the money to DBS. This is quite dangerous. So the thing is, why we want to show you these 4 steps, because we have formed a team of people to do all this work for you, so that when you come to this website called viaatlas.com, you just need to key in your username and password, and when you log in, right, in one click, Desmond, you see, Desmond say bought DBS during pandemic, but sold too fast. Yeah, sold too fast. So now the question is, when do we sell, right? Remember, if the business continue to grow, Yeah, you want to hold the company as long as you can. Now, let me share with you, now a bit sidetrack, huh? Yeah, which is why, you know, being in the community is very important. Now, let me give one example. You know this hypermarket called Walmart. Yeah, Walmart is founded by the Sam Walton brothers. Since day one when they founded Walmart, they have not sold a single share of Walmart today. Yeah, so you ask yourself, Wee Cho Yao founded UOB, right? Do you think when the share price go up, Wee Cho Yao will sell, take profit? And then when he take profit, he lose control of UOB. So he won't, right? Yeah, so it's very important for all of us to, you know, be inside this portal so that when you click on it, can you see there's a one list of company? I purposely hide. I don't want you to see. So I just show you one example of the company that's inside our database. For example, this company is called a UG Health Corp. Yep. So can you see the intrinsic value? We even state the intrinsic value. So this 16 cents to 30 cents. So if you buy 100 stocks, it only costs you $30, right? So investing don't really takes out a lot of money, right? Yeah. So remember, one click, you have one list of businesses that looks something like like this, huh? So let me just move forward, So this, we are talking about companies listed in Singapore. So this access, right, can take place today if you decide to be part of our subscriber. Then, of course, we also meet regularly on a performance basis. So these are some of our gathering. For example, our last meetup was September, and before that was April, before that was December. So let me share with you what we do during the gathering, right? Choose shares over cash as dividend when they give the option to choose. Still holding on. Wow, Frankie, you what lah? Until the accounts come home. So remember, as long as DBS continue to do well, they don't screw up. We want to be like Sam Walton, right? Now, so just to let you know, here at this point, remember, we meet up 3 times per year. Very precious meeting. So who do we meet up? We meet up with the authors who are doing the case study. So in those 3 times, what does it mean, right? Yeah, that means if every time we meet, there are 2 companies, so actually we go through 6 companies, right? So of course, now the question is, do you need 6 companies or more to make it big? You don't really need to, Don't really need to, right? Then you have a chance to have a Q&A with our authors, like, you know, September, which is just 1 or 2 weeks ago, right? And just to let you know, for those people who are our graduate, you will know Liu Feng, Yeah, for those people who are either the SG or US case study subscribers, just to let you know that I finally convinced Liu Feng to be our Singapore case study subscribers advisor. So every time we meet, Liu Feng will be here, and then before that, I'll send Liu Feng the slides, so that he go through the slides, he comment something and so on. So all of you, if you are our graduates, you will know that Liu Feng is a full-time investor, and his hobby is read annual report. Yeah, so can you imagine Liu Feng is on our side, not a YouTuber or whatever, right? Yeah, then of course, just to let you know, the good news is we're going to meet again, which is the 1st of December. And if the stock market collapsed like the pandemic during the March, April 2020, this is another chance. And this time round, you not only have DBS, you have a whole list of 30 plus companies. Yeah, in just one click, And then not only that, you see, for those people, in case you are not our graduate or you are old graduate, you've forgotten what is ROE, ROA, even though Hillary explaining like 1 million times, right? Now we have a complimentary training, which is recorded. You just need to go there, click on anything that you like to revise. If you're old grad, And then, for example, we may talk about things like what's the economic mode, what's the ROE, what's the ROA, what's the intrinsic value. Oh, so David say awesome, One click, Solid, So this is how we support, right? Now, but the best part is this, The best part is tonight. Tomorrow SGX open, At what 9 o'clock is it? 9 plus. Tonight, if you have access to this, tomorrow when, every day you look forward to the sunrise. Yeah, because when the sunrise, SGX, now US case study subscriber, you look forward to sunset. But SG1, you look forward to sunset. So in other words, if you are a subscriber for US case study subscription and then SG case study subscription, you don't need to sleep because you look forward to night and then you look forward to day. So now today you have full access. Tonight, after this conversation, you're going to have access to our 2.5 years of live work, blood and sweat, 34 companies, where 74% are still undervalued today, and you can put DBS aside. So remember, instant access today, right? So in short, how are we going to support you so that me, you, Liu Feng, we do well? Yeah, so hey, by the way, Singapore companies can still do well. provided you buy at a really much undervalued price. So moving forward, from today onwards, every single month we will deliver one company for you. In Singapore, it's very difficult to find. Yeah, so every month one, so that eventually we have 12 companies. Yeah, 12 companies, one a company, right? And that will include company that we go through some form of revision. So that's one. And then our recordings, our analysis are segregated to circle of competence. That means you must know the business, and we do it for you. Yeah, so that you don't have to do all the research work. Yeah, we will explain the numbers like what Hillary is doing. If you listen 10 times, you will know. And of course, ultimately, you want to know the intrinsic value, right? Yeah. So, by the way, all these things is worth, I just put a value to it. Yeah, it's worth, I put $5,000. It's worth more. Over the next 50 years, it's definitely worth more. But let me put $5,000. Now, then, of course, just now we say, right, every 4 months, you're going to meet the author. Yeah, and every time when you meet two authors, right? Two authors, they'll give you 2 companies updates because each author will give you 1. Yeah, so in total, right, in addition to the access, you still have 6 companies updates in total. Say all this work all done for you, right? To company update, new intrinsic value, a Q&A with the authors, and of course, the best thing is with Liu Feng. Liu Feng, I finally convinced, very difficult to talk to him. Okay, so he's on our side. He's our side, not my side, but our side. And then, yeah, all this are the return, right? And of course, for those people who are busy, okay, then I got no time and so on, we have a 1-page executive summary, and then the slideshow, right? All the slides are in the video form. You can screenshot, you can do anything. Yeah. For busy investors. But of course, the most important thing, right, is tonight, you have immediate access to 34 bonus done for you, right? Companies that are listed in the SGX. Yeah, tonight. And the 2 that are still undervalued, so that tomorrow you look forward to the opening of SGX. SGX. So these are the value that are written by the site. Yeah, written by the site. Now, so the estimated ROI in the long run, I just put more than 13K. And remember this afternoon, the lady said, she just said, she already got her money many times back. Yeah, many times back. So the estimated ROI is about 13K. You see that I didn't exaggerate 1.3 million, right? Yeah, because if your capital is huge, that could be, but I put a very small number. So if 13K is your estimated, very conservative ROI, just to let you know that the yearly subscription is 888 only. But if you decide to join us tonight, I'm going to slash off this 888, right? Yeah, I'm going to give you a 35% discount, which means that you are actually buying one, and then you get 2.5 free. Yeah, buying 1 year, right? And then you're investing in 1 years of work, and then your return is 2.5. So you already make like 2.5 times, right? Yeah, so the yearly subscription is only 576, and then if I divide, 1 year is 40 plus. So in other words, you can choose the yearly subscription or the monthly one. My suggestion is to do the yearly subscription, because you divide by 12, I think it's about 40 plus. Or don't choose the monthly subscription. So my colleague has already posted the link, over there, right? You just need to refresh. Yeah, Angelina, I don't know, Angelina, whether are you there in our past gathering? Yeah, so the link is already there. In case you cannot see, can you just refresh? Refresh the page. Yeah, you click the link, right? You will reach a page that looks something like this. What you need to do is you just need to key in your name. Just fill out all the information. Okay, fill out all the information, right? Now, just to let you know that there's a small little thing, right? But unfortunately, my page didn't really reflect that. Now, just to let you know that when you go to the page, there's actually a timer. Yeah, so the timer will count down. So what does it mean, right? In other words, the offer that I've shown here, which is the 35% discount, is only for tonight. Yeah, because some people will think forever, right? Yeah, so we want to reward the action takers, which also means that once the timer is up, if I'm not wrong, I think tomorrow morning, right? The page no longer becomes valid. Yeah, and you can no longer take advantage of the 35% discount, plus the support from us for the next 1 year, plus Liu Feng, and plus all these things I've shown over here. Okay, So the link is already provided by my colleague. Yep, let me see anything else. So I think that's all. So remember, right, the registration is only open for tonight. Once tomorrow you wake up, right, the page will become invalid. Okay, so there's a timer. So we want you to take action today. Yeah, David, the stock market guru, right? So we have about 140 of you still watching this. So this is my last second slide already. So I have nothing else. Now, in case for some of you, you are really interested in investing in companies that are listed in Singapore, right? Because you're close to them, you feel good, and so on. Yep, the link is already there. You just need to click. Frankie say, I'm already US case study subscriber. Any combo package for both SG and US case study? Frankie, is a good question. As of now, don't have, right? But can you like give me a few weeks to think it through? Yeah, a few weeks to think it through. I will look through the database. I think I can make some adjustment. Frankie. So the answer to you is I will say yes for now. But give me some time to think it through. Because at the back end, right, logistically, I'm not very sure the system-wise, how are we going to do it? Okay, Frankie, Ken, you subscribe first. No, but jokes aside, because I already say 100 people watching this, then record on YouTube, so I think I better keep to my promise. So you take it with good faith that it will be done. But let me discuss with my colleague Alex, how are we will make it happen. So you just give me something thinking through how we're going to do it at the back end. Okay, Okay. Yeah, so in other words, if you subscribe today, once it happens, we are going to do some adjustment to the price so that you have like a bundle. Okay, I think Desmond also. Desmond, I already know you're going to post. Yeah. Desmond, you anybody who hear counted, Okay, so what I'm going to do is I'm going to end this presentation in 10 minutes. 10 minutes, What, is cut off already, no timer. Okay, no timer is okay. I self-time, right? So I'm going to look at my watch. Now, so I am going to end this session by 9:30, right? So I'm looking at my clock over here. Right now, I think it's 9:21, right? So about 9 minutes. Yeah, so I'll chit-chat. I'll chit-chat with you, right, for the next 9 minutes. Now, so my colleague Alex has really posted the link. You just need to click on the link, fill up the relevant information. So that's one. The second thing is I will keep to the promise. Jess, we will definitely do the promo. You will give me 2 weeks, Ken, to sort this out. So maybe for those people who are watching this, right? Yeah, you just take note, As long as you are our US case study subscriber, right, we will give you a promo. Yeah, so you just give me about 2 weeks to think it through. Number one, how many percent? Yeah, how many percent, right? I think minimum 10%. Okay, minimum 10%, right? So that's one. Wow, I say already, so I must do. So that's one. Then the second thing is we need to think of when we want to implement this, but we will implement. Yeah, so we will let you know the so-called combo, the discounts, plus the implementation date. Yeah, because the implementation date will depend on the back end. Yeah, back end, we try to figure out at the back end how we're going to do it. Okay, but the answer is yes. Okay, to Desmond, to Angeline, right, who have been supporting us. Yeah, including Frankie. Okay, so, yeah, so my colleague laughed at me. So right now we are at 9:22, right? Wow, so I still have to check with you for 7 minutes. 7 minutes. So, ladies and gentlemen, any question? Hey, by the way, in case you want to leave, if you don't mind, before I leave, can you just click the thumbs up? Click a thumbs up, right? So I realize that some people are quite not so generous with the thumbs up. I only saw 30 plus thumbs up. Hillary spent many days to do DBS Bank. Oh, by the way, to spend some time chit-chat with you, right? The next session, we are going to talk about another exciting company. Yeah, people say super stock and all this. Yeah, but what is the company? We will just keep it in suspense. But it's another company that's listed in the Singapore Stock Exchange. Yeah, so we want to sometimes do alternate Singapore and so on. Wendy, we will do it. We'll do it. You just give us some time. I think my only concern is the back end. How are we going to do it? We are okay. We are okay. Yeah. Oh, by the way, there's one more thing. Then I come back to the part about the combo, right? We will do it. So this is a promise. The same lady who spoke to us this afternoon, just to let you know that she is both a US case study subscriber. She's an SG case study subscriber. If you hear this, she will be very happy. Yeah, very happy, So what happened was, remember 2015, she joined our 4 days value investing program. And then from that point onwards, she's doing very well. Yeah, so that's one piece of information. The second piece of information that I want to share with you that she became a full-time investor. Yeah, I'm 51. She's a few years older than me, so most likely she's mid-50s. Yeah, so remember, she became a full-time a value investor, right, since 2015. Yeah, so 7 years already. 7 years already, huh? And she invests both in US and Singapore, but more in US. I think very little in Singapore. Yeah, so this is her profile, right? And she told me that she's fortunate because her husband is quite supportive in what she does, right? Yeah, what she does. Huh? So I think right now her life is quite good. And then she has 2 kids. If I remember correctly, I think her 2 kids are around late teens or early 20s. Yeah, so she's all good. Yeah, she's like passive income coming in, children's all grown up, husband supportive, and she's doing full-time. In other words, she can do anything that she likes. She no longer so-called has to work for money because the money has already working for her. Oh, then there's one more thing, right? The husband is supportive for her to become a full-time value investor. And the interesting thing is her husband, right, also give her his money. I think all the wives are all happy to know this. Okay, huh? Yeah, payway. Same here. Look forward to the combo. Sure. Guaranteed. Give me some time to sort out the back end, right? Okay, huh? By the way, I didn't discuss this with Alex. So Alex must be thinking, walao, Cayden, you very emotional. Huh? People say one, you also give. Serious, this combo thing is an impromptu, right? I actually didn't discuss. So I think I'm a bit too emotional about things. Okay, Andrew also on. Okay, on. Okay, so Frankie, right? I will check my email, see whether you subscribe already. You subscribe already, there I give you the combo. Okay, so as long as you subscribe tonight, all got combo, can? Yeah, as long as you are our existing US case study subscriber and this. And remember, right, the Liu Feng finally become my advisor. Okay, that's the most important. Okay, huh? Got it. So let me look at my watch again. I talked until perspire, right? So right now is 2:26. 4 more minutes to go, right? Also, the timer is up. Okay, the timer is finally working. Okay, huh? It's okay, right? Wow, quite tough to convince you all about the Frankie. Lucky you asked. I must remember you. Because of you, suddenly I being cornered to do the combo. Actually, I don't have this plan one. But it's okay. It's okay. I think I feel grateful. Yeah. So I think the last part I want to say is for people like Angeline, right? Angeline, Frankie, Andrew, Edmund. I always remember Edmund. Always ask difficult question. Yeah. I think the key is since 2020, we have quite a number of our grads who have been supporting us in our case study subscription. Yeah, and I still remember there's one grad, but I can't remember his name. I remember his face, but I can't remember his name. Right? He did say that during a pandemic, most businesses will go through tough time, and he said that partly he subscribed. Other than getting the research that we have done, 2 things. Number one, he trusts the work because all the slides had to go through me. Yeah, go through me. So that's number one. The second thing is he used the word he say, "Oh, I want to support Cayden," something along the line. Yeah, so I think I'm grateful. So with that, I think I want to reward Frankie and the rest. Isaac, what's the combo deal? Combo deal is if you are our US case study subscriber, we can give a discount. Yeah, give a discount maybe to the SG case study. So just now I put how much? 576. Yeah, just give me like 2 weeks to sort out the back end and how much to do a discount. Can? It's already 35% discount, but we'll give more. Or minimum 10%. Oh shit, I just said minimum 10%. Oh no, I have to commit. Okay, minimum 10% out of that 576. That means after 35%, still further. Okay, can? Frankie, I don't want to see you ever again. Okay lah, so how many more minutes? 2 more minutes. 3 more. 3 more minutes. 3 more minutes. Okay, any other things? Yeah, remember my teammate Alex has kindly put his email over there, right? Alex@mykinesis.com. Okay, there's still 111 people watching this. By the way, have you all clicked on the link? Have you clicked on the link? Alex, is it okay you post the link again? Because the link has went up already. Okay, remember, combo only today. The timer is up, no more already. No more already, can? Yeah, I don't think that next week we're going to do it again. We are not going to do it again. Next week, don't ask me combo. No more combo already. Can? Okay, next week, no combo. Frankie, no combo. Okay, what else? What else can I chit-chat with you? Okay, the link is already there. You click on the link, you fill in all the information correctly, and give me 2 weeks. 2 weeks. 2 weeks should be by maybe 3rd week of this month. We will announce to all our SG case study subscribers who are already our US case study subscriber, the combo and so on, how much reduction and so on. Minimum 10% can. Wow, Desmond, you know how I haven't eaten yet, right? Okay, so I think it's maybe about 2 minutes left. Yeah, we're going to leave the link there. So remember, once you click, there's a timer, right? Once the timer up, no more combo deal. Okay, I can. Now, the next time I'm going to see you, I think, is just now I say, I think it's 1st of December, right? For the SG case study for the combo one. And this time round, the person who read annual report as a hobby, right, is going to come on board. Which is Liu Fong, me, right, plus 2 more authors, and then plus 2 more companies that we're going to talk about, SG companies. So don't underestimate SG companies. Yeah, we can still make good money, right, as long as we can buy an undervalued price. Yeah, so remember, we are VIA, Value Investing Academy, right? Yeah, our mission is actually we care to make you a better investor. So I sincerely appreciate 100+ people of your time, especially those people who are with us. Yeah, but of course today most memorable is Frankie. Frankie. Okay, I will always remember you. And yeah, so we are VIA from Value Investing Academy. So I sincerely appreciate your precious time. So 1 more minute. Once 1 more minute go to 0, right? That's it. So combo deal is off, right? Yeah. If you have any question, please feel free to email alex@mindkinesis.com. And then tomorrow is what day, right? Tomorrow is Thursday. Yeah, tomorrow is Thursday. Very fast. People already fantasize about Friday. Yeah. So all of you have a good week ahead. And I shall see you soon, right? I think if I'm not wrong, should be 1-2 weeks later. Together with Hillary, we're going to talk about another company that is listed in SGX. Okay, Voila! So, ladies and gentlemen, I shall see you soon, right? So remember, click on the link, fill up to take advantage of our impromptu series, really impromptu combo deal. Okay, so that's it. Okay, so goodbye.